Hey, this is Justin with daytradethemarkets.com. It's Monday, December 4th, 2017. I wanted to use an example from the NASDAQ today to illustrate the idea that we talk about a lot, which is the 2 out of 3 concept or the 3 out of 3 concept. And the logic behind it, I'll explain and I'll give an example here. But basically what we're looking for in trading is we want to find a way to have a repeatable edge. We don't want to be, trading based on hope and luck and going into every day thinking, I hope today it works out. I hope I don't take 3 losers in a row, whatever the case may be. I'm not saying you won't ever take 3 losers in a row. I'm just saying you don't want to be thinking that way. You want to be thinking in terms of, hey, I know I have an edge. I know I have a way to make sense of the market. And if you can make sense of the context of the market, you've got a strong edge as opposed to just kind of hoping that your indicator or your trade setup happens to work this time. So that's the idea here. It's context first, then within that context, let's find a way to get into the market. So let me talk about this 2 out of 3 idea. Basically, what we're doing is we're looking at 3 different evidence points, okay? We're looking at a big picture bias, okay, which is basically long-term market analysis, and that's known prior to the day starting, okay? We then want to look at what I call zone evidence, and this is just kind of a different take on support resistance, but this is also, known prior to the day starting, and this is kind of an intermediate analysis of the market. And then finally, we want to look at what I call box and aggression evidence. This is looking at a short-term market analysis. This is telling us what's happening right now, okay? Now, this we don't know before the day. This is developing as the day unfolds, okay? And the idea is that if you can get all 3 of these pieces of evidence lining up together, perfect. You've got a very strong edge, 3 out of 3, okay? If you can get even 2 out of 3, you have a very solid edge. You have a trade that's probably worth taking. 1 out of 3, just one lining up with your trade, can certainly work. It's a little bit more risky. If you have 0, I mean, you're just gambling. You're hoping for the best, and that's not what we want to do. So if we think about that, let's look at this chart from the first half of the day or so from the NASDAQ today. First question is, what's our big picture bias? Okay, well, heading into the day, our big picture is neutral, so it doesn't really have a lot of help with us today. But certainly, if it was up or if it was down, that would tell us one thing. That just means long term, where would we rather be trading? So heading into the day, our big picture bias is neutral. It doesn't do a lot for us in terms of the zone evidence. Okay, so going into the day, what are we looking at? Well, we have a couple of things. We have this zone up here that's in gold. That heading into the day, based on where we opened, is expected area of resistance, okay? So in other words, if the market, here's where we were Friday, if the market comes up in here, we would expect resistance from that level. On the flip side, if we start to gain ground into this, that's a bullish indication, and we would perhaps expect this to make its way higher, okay? And then below the market, we have this zone down here, which we would expect to offer some support, okay? So in other words, if we come down here and test in this area like we did in here, you would expect some support heading back that way. And now, obviously, if the sellers are strong enough to come back in, which we know they did later in the day, and get it below here, that's a bearish indication and tells us that it's likely to head down further. So that's the couple things that we know ahead of the day. Before we start today, our big picture bias is neutral. It doesn't really help us today. And if we test up in here, we would expect resistance. If we test down in here, we would expect support. Okay, so that's kind of our context heading into the day. Now let's look at what happens early in the day. We get what we call a selling box, happens about right there. Okay, and what that's telling us is now that as of the time of that happening, it's telling us, okay, our first structure of the day, our first box of the day is made by sellers, and it's this structure here. Let me just make it thicker so it stands out a little bit. That our expectation when that happens is that when the sellers make the box, they should be able to hold the high of the box if tested, and if they're strong, they should be able to accept price down here. Okay. Now on the flip side, if the sellers are not able to hold, and buyers would be able to get up in here, well, that would tell us that the sellers. That's showing us that sellers are having weakness. But our expectation when it first forms is that, when this box comes in, we would expect toward the high of that, it should offer us some resistance. So if you think about it, what do we have here? We have on the box level, okay, again, over here, on the box level, it's telling us that the market is bearish. It's also telling us that we would expect resistance right here on the box level. On the zone level, we're seeing the same thing. Again, zone evidence. We talked about how going into the day we would expect resistance here. Well, right here as well, this is an area where on the zone level we would also expect resistance. So we have on, the the box level resistance, on the zone level resistance, all coming together right in that area right there. Now, our big picture bias is neutral, so it's not hurting us or helping us, but we have 2 out of 3 right in that area right there. So does that guarantee that this is going to work? No, it doesn't. But what it does tell us is that we have a pretty good edge here. It probably is going to work. It's better than 50-50, certainly, and our risk is very small. In other words, we're wrong somewhere up in here. If we're right, it should at least make it to the low of the box. And if the sellers then come in and show that they're even stronger like they did here, then we have the potential for a pretty nice run down, maybe even all the way to this area of support. Okay, so again, it's about putting the market in context first, finding situations where you have a definable edge that's repeatable, that's not just luck, and then knowing how much risk you'd have to take to test that opportunity. And if the risk is relatively reasonable relative to the opportunity, you've got the setup for a trade. Again, there's nothing magical about this. I'm not claiming this works 99% of the time. I'm not complaining I'm not claiming that you're going to, I'm not claiming it's the holy grail and you're rich by next Tuesday. I'm simply saying that if you can learn how to make sense of the market using proper tools and put the market in context, more often than not, you can put yourself in situations where you have an edge and where the amount of risk you're taking is reasonable relative to the opportunity that exists. I think that's all we can really control when it comes right down to it. So if that stuff appeals to you, let me know. I'm happy to answer any other questions. I think it'd be a good fit. If you're not to that place yet, you're still looking for kind of the magic indicator, that's fine. No problem, but it probably wouldn't be the right fit for you. So anyway, talk soon, and thanks again.